Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Dexter Mahachi, research analyst at SP Reid, for a closer look at Africa's top cement stocks. Today, we're specifically focusing on Dangote Cement and Lafarge Africa, both headquartered in Lagos, Nigeria. Dangote Cement is a fully integrated cement company and has projects and operations in Nigeria and 14 other African countries. It's also the biggest quoted company in West Africa and the only Nigerian company on Forbes Global 2000 companies. Lafarge Africa, formerly known as Lafarge Cement WAPCO Nigeria, thankfully changed its name in August 2014. The company was founded in 1959 and is a subsidiary of Lafarge SA Group. Dexter, yes. I know this is one of your favorite sectors, and in my mind actually quite exciting in terms of the underlying operational performance of some of these businesses has been phenomenal on the back of, I guess, increasing demand in cement, specifically in Nigeria.
Yeah. Basically, cement stocks have been some of the strong performers over the past 3 or 4 years in Nigeria. In particular, Dangote has ramped up production quite considerably, and it's now approaching close to about 30 million metric tons of production per annum across its operations all across Africa. Lafarge as well has undergone a restructuring process, partly in order to compete more effectively and also partly because of the potential merger with Holcim, which is still being worked out. If we were to look at it, the Nigerian businesses have benefited a lot from the backward integration process, which I've mentioned before. That's been happening in Nigeria, where the Nigerian authorities were looking at basically trying to step up the manufacture of cement in Nigeria itself, and stop the importation of clinker and cement from other countries in a bid to more or less increase the number of jobs available in the country and also to diversify the country's manufacturing base.
And in so doing, they've facilitated the growth of some phenomenal businesses.
Of course, they're very good businesses. I think if we look at the margins that these guys are experiencing, Dangote's margins are on average about 62 to 65%, whilst those of Lafarge are a bit lower down, around 32, 35%, which is fantastic in any sense.
It's fantastic for any business, let alone cement. I think some of the producers in South Africa clearly look at that and probably cringe given the margins that they make. Dangote in particular, what's the current profile of the business looking like? I know they had Q1 results not so long ago, and we're probably likely to see half year. What's the trend? What are we seeing in terms of the business?
Actually, they're doing a lot better than most people were expecting, particularly because demand has been particularly robust for cement in Nigeria, despite the elections and the turmoil that has been experienced and the uncertainty that people have been experiencing after that. In the first quarter, I think gross revenues were up about 10.8% to about 111 billion naira, 114 billion naira actually. Whilst for Lafarge as well, its revenues were up 15% to roughly about 57 billion naira. So on the whole, the cement companies have been doing well. Dangote has been doing particularly well because it also experienced a bit of an improvement in terms of gas and energy supplies, and it also shifted part of its energy costs towards coal. And that impacted positively on its margins, and as a result, its profitability was particularly good in the first quarter.
I guess if we start out in terms of that revenue growth, is that from cement volumes, or is that really a price movement?
It's a mixture really. It's cement volumes, which were up about 3% year on year. And this is for Dangote, and also the improved. Should I say the increased demand to which also resulted in a lot better sales figures.
Okay. Now, I guess in terms of their underlying costs, energy costs are a material factor in that. How does oil price or a lower oil price affect these businesses?
If you really look at it, the biggest cost for most of these for most of the cement companies is when they are actually producing cement, they have to convert the limestone into clinker and refine it a lot better.
Right.
And that takes up to about 40% of the energy costs in any operation. So
right.
they mostly use, a lot of them use a combination. Some of them use what is called low pore fuel oil. Mm-hmm. And the problem with low pore fuel oil is that it's more or less a heavy oil, and it's quite expensive. And it is in effect related to the oil price.
Right.
So whenever oil prices are up, the cost of low pore fuel oil also goes up. Right. Which in effect means that the energy costs for a lot of the producers tend to rise. Now with Dangote, what they've managed to do successfully is shift their production from shift the use of from the use of low pore fuel oil towards gas and coal.
Right.
And this has also happened with Lafarge as well in some of its operations with the Shaka, which has used a lot of coal, and also with some other cement producers like Cement Company of Northern Nigeria, right. Which has also shifted towards more towards using coal. This will in effect add about 10 to 15% margin points to their gross profit margins. And and when we look at the current mixture and the current returns we're getting from the Nigerian cement companies, it's mostly because they've got in Dangote's place very efficient plants, and also they're shifting towards cheaper energy sources and away from oil.
Right. So, man, that sounds like the dream for any investor. You're talking top line growth, improving margins. So, bottom line's improving quite nicely.
Quite reasonably so. I think in the next half, we're actually expecting Dangote to do quite well. As of the end of first quarter, they posted about a 44% increase in net profits. We're looking at them continuing that in the first half. Lafarge might be affected negatively because they've had the exchange impact on one of their associates, which is called Unichem, where you find that they were hit by the depreciation of the Naira to some extent. So they posted a 2 billion, they had a share of a 2 billion loss. So you find that year on year, the profits went down by about 20% or so. Right. But in Dangote's example, we're actually looking at a very good profit growth in the by the end of the first half.
Right. So if we focus on Lafarge a little bit more, you touched on earnings going down because of the currency effect. What is their outlook like? Are we seeing an increase in terms of production? Are you as bullish in terms of the underlying operations with that business? With
Lafarge, it's a bit of a mixed outlook. They have some operations which have a few problems that need sorting out. For example, the South African operations have been hit hard by the competition from Tshepo Cement, which is one of Dangote's subsidiaries. And along with, of course, other South African cement producers, they've lost quite a bit of market share. And that has, of course, affected the profitability of the group as a whole, because South Africa contributes about 30 to 40% of the group's total revenue. Right. If you look at Lafarge's Nigerian operations, they're actually going quite well, particularly the WAPCO has been doing quite well. Ashaka, over the past few months or so, they actually had to shut down some of their plant in order to do some maintenance. But this is due to come back online, so we're expecting the profitability to improve as we go through, the profitability and the volume sold to improve as we go into the second half or so. But if we were to compare our outlook for Lafarge and Dangote, we're a lot more positive on the outlook for Dangote than we are on Lafarge.
From an operational perspective.
Exactly, from an operational perspective.
So I guess my next question is, given the political changes in Nigeria, do you see anything from a policy perspective that materially influences how these businesses conduct their operations within Nigeria?
I think from a policy perspective, nothing really will change. At least that's our expectation at the moment. Probably what will be happening is that because some of the plants which have been put up during the phase in which companies were being actually encouraged to start manufacturing cement might start to come under taxes. So the net profit margins might start to reduce over the next
for both businesses,
3, 4 years or so.
Right.
Yes, for both businesses. But in terms of the policy itself, we don't see we don't see any material changes over the next year to 2 years.
Okay, so throwing all of those things into the pot, your outlook for both companies from an investment perspective?
I think from an investment perspective, what we would like to do is, what we would like to advise investors to do is to more or less to pile into Dangote. Its shares have gone down quite a bit from around 200 to about 174 naira.
Right.
Lafarge has gone up to around about 100 naira or so, but we see more benefits in more profitability emanating from Dangote over the next year and a half or so. So we would have more of a buy recommendation for Dangote than for Lafarge, where we would rather hold.
Perfect. Okay. Let's leave it there. Thanks, Dexter. Thanks to my guest, Dexter Mahachi, research analyst from SP Reid. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.